members for the fourth session, technical session on RCM, scrap, RCM on scrap, removal property and other entities. Come to there. It's my privilege to introduce the speaker. She is Naveen Raj Purohit, a chartered accountant, indirect tax specialist, and practicing in Naveen Raj Purohit and Company. He has established and grew a successful tax advisory practice, delivers specialized services in indirect tax planning, built and maintain a robust client portfolio across various industries. His core competencies are tax advisory services, litigation and dispute resolution, industry expertise, and his publications are co-authored comprehensive works on GST and KVAT audits published by ICA. Authored e-payment procedure under KVAT law, regular contributor to professional tax applications. He is a regular speaker at ICA Bangalore branch and expert presenter on tax topics. So, with this brief introduction, I request the speaker to speak.
Good afternoon, ladies and gentlemen. It's an indeed pleasure for me to stand before you and address this august gathering. After a long time, I am standing before you. I should thank the chairman of the ICA Bangalore branch for giving me an opportunity. The topic which is given to me is RCM, reverse charge mechanism, on scrap, immovable property, and other entries. So I was thinking, what do you mean by other entries? Should I take the entire RCM or should I apply existing generalists here also and try to this other entries, whether it's for immovable property only or it's for even scrap? So even I got confused that other entries is what? So since the whole day session is on relating to the immovable property, so I believe that even other entries will be restricted towards the immovable property. The extra thing which they have given is on the RCM on scrap. So what do you mean by reverse charge mechanism? So basically reverse charge mechanism is where the recipient is liable to pay the tax instead of the supplier. So what does that mean? That means that the recipient becomes deemed to be a supplier and therefore he has to pay the taxes. Normally he is also entitled to claim the ITC. So that's the. So what are the provisions are covered? Section 9 subsection 3 and section 9 subsection 4 of the CGST law or SGST law, and similar provision we have under the IGST also, which speaks about the RCM. Section 9(3) clearly says that based on the recommendation by the council, any supplier of goods or services where the registered dealer who is a recipient is liable to pay the tax. Section 9 subsection 4 speaks about the purchase from the unregistered dealer. When 2017, when it was introduced, GST law was introduced, for a period of 6 months, we had the purchase from an unregistered dealer, you were liable to pay the tax. Subsequently, they given an exemption. Till now, there is no notification as such issued under section 9, subsection 4. Am I clear? Now, RCM on scrap. So this is a recent entry which has been introduced. So under GST law, RCM we have a two notification, one with respect to goods and one with respect to supply of services. Notification number 4/2017 clearly takes care of the goods, okay, and 13/2017 will address on the services. So what does notification number 4/2017 says that if specifically with respect to 6 and 8 which deals with the scrap. So entry number 6, if any registered dealer, please mark this one, if any registered dealer procures goods from central government. So if he is procuring goods from central government, excluding Ministry of Railways, state government, union territory or a local authority, what are the goods? Used vehicles. So if any registered dealer purchase the goods of used vehicles or seized and confiscated goods, like under inspection where or in the checkpost where the goods have been seized and they do the auction. So even those goods which has been purchased, okay, old and used goods, need not be a scrap, it can be old and used goods, that is second hand goods, will also come under the purview of the RCM, waste and scrap. So any waste, be it a plastic waste, metals waste, anything, if a registered dealer purchasing these goods, which are those used vehicles, okay, waste, scraps or old used goods or the confiscated goods, then the registered dealer is liable to pay the tax under RCM. Clear this? What happens that if the state government or the central government sells goods to the unregistered dealer, right? So if the state government or the central government or the local authority, they sell the goods to the unregistered dealer, then the state government is liable to pay the tax under forward charge, right? So here, any of these goods, basically with respect to waste and scrap, under any chapter of the customs law, okay, any scrap of any chapter, then the registered dealer is liable to pay the, under RCN is liable to pay the tax. So this is with respect to entry number 6 of the notification number 4/2017. Now entry number 8, which came into effect from this 10th October, where a registered dealer, okay, basically with respect to metal scrap, which are covered under chapter number 72, 73, 74 till 81. So if any registered dealer purchasing the goods from an unregistered dealer, this metal scrap, basically the metal scrap from any unregistered person, then RCM would be applicable on the registered dealer. So there is a registered dealer who purchased the scrap, okay, who purchased the scrap from an unregistered dealer, then the registered dealer is liable to pay under RCM. So why this entry has been introduced is because recently you would have seen that with respect to scrap dealer, there are a lot of fake invoices that have been floating around, right? So there are a lot of fake invoices are floating around. It is for this reason both TDS and RCM has been brought into the metal scrap. Basically this is with respect to metal scrap. Those which are covered in chapter 72 to 81, not the plastic scraps and all those things. It is purely metal scrap like ferrous, non-ferrous and iron and steel, all those things, those waste and scraps are covered under the entry number 8 of notification number 2017. Now this is effective from 10/10/2024. GST rate, normally all the scraps are subject to tax at 18%. But again, whatever the rate, depending on this, will go to the notification number 11/2017, see the rate. If it is below 18%, then that rate would be applicable. So the commodity rate will be liable to pay the tax. So what is that registered dealer is required to do? He has to raise a self-invoice. Okay? So self-invoice is mandatory. So he has to raise a self-invoice within 30 days. I'll tell you the time when he has to raise the, so when I come to the time of supply. E-invoicing, whether e-invoicing is required, normally for a unregistered dealer, e-invoicing is not required. Therefore, here also e-invoicing is not required. For self-invoicing, there is no invoicing where you have to put the TRN number and all those things. Can he avail the input tax credit? Yes, he can avail the input tax credit. Now here the crux, what you need to understand is that in case of unregistered dealer whose turnover is more than 20 lakhs, okay, whose turnover is more than 20 lakhs, then is he liable to do the RCM or the TDS will come into picture? Are you able to get my point? There is a unregistered dealer whose turnover is more than 20 lakhs. In that scenario, what the registered dealer is required to do? Is he required to do the RCM or will he cover under TDS? This is a crucial area which, sorry? TDS. Okay? What you need to do? Okay, the registered dealer, please take an undertaking from an unregistered dealer that his turnover has not exceeded more than 20 lakhs. Assuming his turnover is exceeded more than 20 lakhs, and if he has paid the RCM, then if he has not have done the TDS, then again TDS will come in. Are you able to get the point? Okay, so always take an undertaking from an unregistered dealer that was your turnover is below 20 lakhs, therefore you are not registered, you are not liable to register with the GST law, and therefore RCM is applicable. What is the transaction value? The transaction value, I'll come to the TDS part. Okay, what is the time of supply? Here, at what point of time you are required to pay the tax? So section 12 subsection 3 deals with the RCM relating to the goods, and section 13 subsection 3 deals with the RCM related to the services. So section 12 subsection 3 says that the date of receipt of goods, the date when you receive the goods, or the date of payment entered in books of accounts, or you have debited in the bank account. The payment is debited in the bank account, or the date immediately 30 days from the date of issue of invoice or any other document by whatever they call in lieu thereof by the supplier. Now the supplier has issued the invoice, so within 30 days you are supposed to raise the self invoice and pay tax accordingly. So any of the dates, whichever is the earliest, you have received the goods, you have to pay. Like for example, you have received the goods on 30th April. Okay? You have received the goods on 30th April, you made the payment on 2nd May, and invoice is also raised by the supplier on, say for example, on 3rd or 5th May. When does the liability arises? Should I pay the tax on May 20th or should I pay the tax on June 20th? May 20th. Because my section 12 subsection 3 will come into picture, where the time when I receive the goods is the earliest of 3. So therefore, you are liable to pay tax on 20th of May 2024, whatever it is. Am I clear? Right? Where it is not possible to determine the time of supply, like during the transit, goods are in the transit or for whatever reasons, where you are not able to determine the time of supply, then the time of supply shall be the date of entry in the books of accounts of the recipient of supply. The date when you record in your books of accounts, that will be the date to be considered if the time of supply is not able to determine it. Am I clear? So even though goods are in transit, you have recorded on say 29th April, goods received on 2nd, payment made on 3rd, then what happens? The date will be again May 20th, which is the date when you are required to pay the tax to the government. Clear? Now, there is also TDS which has been introduced for metal scrap. Now, what does this say? That TDS applicability will be when metal scrap is purchased from a registered supplier. Now, RCM was from an unregistered dealer. Now, TDS is for a registered dealer. Are you able to get the point? So, if the unregistered dealer whose turnover exceeds more than 20 lakhs, he is liable to register. Therefore, what happens? TDS will come into picture. Section 51 will get removed. Are you able to get the point? So, registered dealer definition says a person who is liable to register is also a registered dealer. So, you land up paying RCM and you also again land up paying the TDS. Or the issue will be subject matter of litigation. So, you need to be careful that any metal scrap dealer, please take an undertaking that his turnover has not exceeded more than 20 lakhs or 10 lakhs depending on the state, whichever state you are procuring. What is the rate of TDS? It is 1% CGST and 1% SGST. If it is interstate, then it will be 2% IGST. Right? Threshold TDS applies only if the total contract value exceeds more than 2.5 lakhs. So what happens? Take a scenario that you have purchased in the month of April 50,000, you purchased in the month of November 50,000, and in January next year you purchased 1.5 lakhs or say 2 lakhs. Now whether TDS is applicable on the 2 lakhs, because you have purchased 50,000, first installment 50,000, second 50,000, next 2 lakhs. Now all put together it is coming to 3 lakhs. Am I liable for a TDS? Yes or no?
Yes.
Again, this issue is a matter of litigation because the wordings are used contract. Okay? Please understand, here the wordings, what is used under section 51, it is the contract. If a particular contract is more than 2.5 lakhs, okay? If each contract is a separate, because oral contract is also a contract, a written contract is also a contract. Now, the 50,000 what you have purchased, that TDS will not come into picture. The second 50,000 what you have purchased, TDS will not come. The third grade installment what you have purchased, 2 lakhs. If all three are the different contracts, then TDS will not come into picture. Am I clear? TDS will not come into picture. However, in order to avoid litigation and all those things, it is always advisable to deduct 2% TDS because the other person is entitled to, he will get in his electronic cash ledger, he is either entitled to claim the refund or he can adjust against his auto tax liability. Because to determine whether this contract is for the year or each is a separate contract, Again, it is a subject matter of litigation. Okay. Strictly speaking, as per the law, each contract has to be looked into separately. In the sense, each transaction has to be looked into the separately. Am I clear? Everyone? So, each contract, if it is more than 2.5 lakhs, then you are liable to pay the TDS. That means this is B2B transaction. Earlier RCM was C2B transaction, right? Now this is B2B transaction. So buyer has to get registered with the TDS, apply for GST registration 07, file TDS return GSTR, and issue the TDS certificate in GSTR 71. Then TDS credit will be available to the supplier via cash ledger, which can be used for offsetting his GST liabilities. So this is with respect to RCM on scrap and TDS on scrap. Any doubt, any clarification? Yes, sir. We don't have a? See, now you don't have to do that, but later on department will come into picture and you have to fight for it. So that's why take an undertaking. Yeah, to safeguard you that, take an undertaking that it is below 20 lakhs. See, now what you say, since he is not registered, he will not have a GST number, therefore you do the RCM. You have done your this one. But later on they will come and when they do the inspection of that particular dealer, and when they come to you that you are not done the TDS because his turnover is more than 20 lakhs. Possibilities actually. Okay. So always take an undertaking. Advisable to take an undertaking to avoid future litigation.
The transaction is of 20 lakhs from the unregistered dealer.
Then that is, be rest assured that it is, his turnover will be more than 20 lakhs.
No, correct. But if the GST number is not there, then where will you pay this TDS?
Where will you pay TDS? It's a valid question. So where will you pay if it is, when you have purchased the goods from an unregistered dealer, say 22 lakhs, he is not registered, where will you do the TDS? So you have a temporary registration, do the TDS and intimate to the department. Okay? One way of looking into it, or ensure that this other party get registered, only then you procure it. Right?
This one, how do you determine whether it's a scrap?
How do you determine whether it's a scrap?
Second-hand goods also.
See, second-hand goods is where it is a used vehicles or used goods. It becomes a second-hand. Now, whether it is a scrap where you buy in a bulk, which includes everything, okay? Normally, those will be construed as a scrap.
There is an almirah in my office. I am giving it out. So for me, it might be a scrap. For other person, it might be a second-hand.
No, for you, it has to be a scrap.
Plus the HSN code says the specific 72 or 74 scrap करके it is specifically says.
No. His question is whether it's a scrap or a used goods.
So by
Which the usage cannot be generally, like for example, the almirah, which he cannot use it again as an almirah, then generally you consider as a scrap, otherwise it will be used goods. Like this chair, can I use it again subsequently as a chair?
No, my intention might be scrap. His intention might be second-hand.
So you will raise an invoice as a scrap, no? So intention doesn't matter. What invoice you raise, right? So let's get into the RCM on immovable property, which is the kind of a litigated area of residential, where you let out a renting of an immovable property. So renting of immovable property covered under section 7, which clearly says that renting of immovable property is considered as a supply of services. Okay? The applicability of GST is differentiated based on commercial properties taxable at 18%, residential property may be exempt or may be taxable. We have to see that. Now, RCM on immovable property, what are the provisions which are applicable? One is section 7, which defines the supply. Renting is a supply. Section 93 and section 22 for a registration requirements. So notification number 11/2017 specifies the rate of tax with respect to services. Notification number 12/2017 lists down the exemptions which are available for the residential properties. Notification number 13/2017, as I told you that 4/2017 RCM with respect to goods, and 13 bar 2017 is an RCM with respect to specified services. Okay. So there are 5 entries which you have to look into. What are those entries with respect to immovable property under notification number 13 bar 2017 is that entry number 5A. So what does entry number 5A speaks about? Renting of immovable property by government. So if government is letting out an immovable property, then RCM would be applicable. So that is entry number 5A is covered. Entry number 5AA, residential properties. Right? So entry number 5AA speaks about residential properties which is let out to a registered person, then RCM would be applicable. 5AB is added with respect to RCM on commercial properties effective 10/10/2024. Okay. So 5AB is with respect to commercial properties. Entry number 5B is with respect to TDR, transfer of development rights, or FSI, where RCM would be applicable on the promoter. Then 5C is where long-term lease of land. Okay. On a long term, you are given a land which is for more than 30 years or more, then any person or a promoter would be liable to tax. We'll see that each of the things. And we have a circular 177/09/2022 speaks about the residential properties rented for business purposes. Now let's go one by one. Entry number 5A. What does entry number 5A speaks about? It says that supplier, who must be the supplier? Services supplied by the central government, excluding, please understand, excluding Ministry of Railways, okay, state government, excluding Ministry of Railways, then state government, union territory or local authority. That means central government, state government, union territory or local authority, they have to supply the services. It excludes only the Ministry of Railways. Am I clear? Right? By way of renting of immovable property. So they have to let out their immovable property to a person registered under the central GST or SGST. So same thing. Who is liable? Any person who is registered is liable to pay the RCM. So what happens in case of unregistered person? What happens in case of unregistered person? Government will pay. Okay? Government is liable to pay the tax. No exemption. So they are liable to pay because if you see the exemption, any service provided by the central government excluding renting of immovable property. Right? That entry number 5. So entry number 5A clearly says that if any government is letting out its property to any registered person, then the registered person is liable to pay the RCM. Whether he is eligible for to claim the input tax credit, yes, ITC can be claimed. Is that clear? Everyone? Next, get into the residential property. Okay?
So why they excluded the railways here?
Why excluded? Because railways, again, the parking, these things they have exempted. And now if you see the railways, generally they are getting into the commercial business kind of thing. Okay? So that's the reason where they are told railways also to pay the tax. Okay? Now, entry number 5AA speaks about the residential property. Supplier says any person, please underline this one, any person, he can be a registered, he can be a unregistered. Am I clear? Everyone? Any person, services by way of renting a residential dwelling to a registered person. Okay? Any person who is providing, whether he is a registered person or an unregistered person, providing the services with respect to renting of an immovable property to a registered person, then who is liable? Registered person is liable to pay the RCM. The entry was applicable with effect from 18th July 2022. Okay? The above entry implies that registered recipient availing service of renting of residential property is supposed to discharge GST on RCM. So in this case, RCM applicable even if the supplier is unregistered or the property is used for commercial purposes. Whether ITC is available, now let's get into the scenarios. Okay. So there is a company, okay, has taken a property on a let out basis for its employees, guest house, for a residential purpose, or few flats they have taken on a what do I say? On a rental basis from a registered or an unregistered person. Now, whether the company is liable to pay the tax, the company is liable to pay the tax or no? Company is registered.
But it's not used for commercial.
Not required. Irrespective of it. Irrespective of it. Whether it is a commercial purpose or not commercial purpose. Now let's keep this in our mind. Okay? A chartered accountant who has taken a flat, okay, on a rental basis and running a business. A chartered accountant who is running a business, he is practicing, which he has taken a flat on a rental basis from a landlord, whether he is liable to pay tax or not. He is a registered dealer, so whether he is liable for RCM or not, yes. In that, partly he is using for business purpose, partly he is using for own residential purpose. Are you able to get my point? Okay. Whether he is liable to pay RCM or not?
Only on the commercial part.
Only on the
Commercial.
keep this in mind. Okay. Now, first scenario is a company which has taken for its employees. The second scenario, a chartered accountant who has taken for his office purpose, partly for the business and partly for his own residential usage. Right? A chartered accountant taken a building on a rental basis, right, for his own residential purpose. I am a registered dealer, okay, registered practicing chartered accountant. I am running my office in another location, which is a commercial office. Now I have taken for my own usage, where family stays over there, the residential building. Am I liable to pay GST or not?
No.
RCR?
No.
Okay. The three scenarios. Are you able to get the point? Everyone. Now let's go one by one. Irrespective of whether the landlord is a registered or unregistered, please understand, irrespective of whether landlord is a registered or unregistered, the liability will be on the registered person. Now, when a company has purchased, when a company has taken a building on a rental basis for its employees, for a residential purpose, a guest house or whatever thing you call it, then the company is liable under RCM. Okay? The company is liable for RCM. Now whether ITC available or not, we'll come to that later. Understood? The second scenario, where a chartered accountant has taken a building on a rental purpose, a residential building, partly he is using like a freelancer, partly he is using for business purpose, and majority of this he is using for a residential purpose. Whether he is liable or not, he is liable. On the entire rental amount, he will be liable for RC. Okay? Why? Because what does it say? That any person who has, by way of renting a residential dwelling, has he rented out for a residential dwelling to a registered person? To a registered person? So whether this residential building is used for whatever purpose, are you able to get my point? Whether this residential building is used whatever purpose, he will be liable to pay the RCM. Okay? One school of thought. I'll come to that. Now the third scenario is that a residential building which is taken for wholly for the residential purpose only. Are you able to get the point? Wholly for the residential purpose only, and I'm an individual. Okay, we're running the business and commercial property. Then there for staying purpose, I'm using the residential building. Am I liable? Answer is yes. You are liable to pay the RCM. Are you able to get my point? Are you able to get the point? What does the law says? The law says that any person who is giving a service by renting of residential dwelling to a registered person, they are not specified for what purpose and whether it is for furtherance of business or not. They are not stated. So this is one school of thought. Everyone, is that clear? Now there is a second school of thought. Okay. Now let's come to the second school of thought. If you look at the definition of a supply under section 7, it says that supply includes XYZ for the purpose of furtherance of business. Are you able to get my point? For the purpose of furtherance of a business. So, in the third scenario, where I am using building for residential purpose, are you able to get the point? Where I am using the building for the residential purpose, then RCM will not be applicable. Similarly, where partly I am using for residential purpose and partly for the business purpose, then only to the extent of part you are supposed to liable to pay the GST and part you are not liable to pay the GST. Now this issue will be a subject matter of litigation if you take this stand. Are you able to get the point? Right? So this issue will be a subject matter of litigation because the wordings which are used under the notification, it says that any person to any registered person. Okay? When he is any person who is letting out residential dwelling, that means a resident property, obviously it is used for resident purpose only. Correct? Obviously it is used for resident purpose only. Now, there is another school of thoughts, this is one more example, where this expenditure of residential property, the rent, if I put it in my P&L account, that means I am recording in my books of account, that means it is used for business purpose. Okay? If I don't put it in my P&L account, are you able to get the point? If I don't put it in the P&L account, then you can take a stand that this is not liable to RCM. Am I clear on this? Everyone? Any doubt? Yes, sir.
Sir, in case of the company,
Sir, you need to be louder.
In the first scenario, sir, company taking for lease for the employee purpose, and tomorrow you will collect rent from the employees as a reimbursement. In that situation, RCM is applicable.
RCM is applicable on the rent what it pays to the landlord. What you are doing, what it is collected from the, that is the second scenario. Are you able to get the point?
In the book, sir, it will be nullified. The rent will not be showing.
But still, you are liable to pay the on the rent what it makes. You get the point?
Yeah.
So it will be liable.
So there will be two charges, forward charge and reverse charge.
Yeah.
Two charges will be paid.
No, you can claim exemption as a residential dwelling, but the guest house is not be considered as a residential because that time period, if you look into it, the further another notifications, it says that at least 90 days and above should be for use for residential purpose, alright? For staying purpose.
That I understand. For this question, when they get a reimbursement from employee company, so again it will be a forward charge.
If it is purely used for residential purpose, then because the service is rendered to an unregistered person.
No, the company is registered.
Company is registered, but it is not with respect to RCM. I'm talking about if a resident, what do you say? I'm a landlord. Okay, I let out for a residential purpose to an unregistered person. Am I liable? Residential dwelling per se is exempt, except in this scenario. So in this case, again we have to look into it whether it is a guest house where it is used only for limited period or it is actually used for residential purpose. If it is used for residential purpose, then exemption you can claim. But if it is used as a guest house, then exemption cannot be claimed. Then it will be liable to tax. Because then it will not be considered as a residential dwelling. Are you able to get the point?
Any basic exemption like 5A?
What is basic?
Renting.
No, RCM no exemption. RCM.
Even for 1 rupee also you have to pay.
Yeah. Is that clear?
Sir, if
about a scenario where a freelancer is providing service from the residence itself. So, and assume that he is not charging you his P&L. So, he is using same accommodation.
Are you registered?
Yes.
You are registered.
Yes.
Okay, as a freelancer you are registered.
Yeah.
Okay, that's what I told. There are two scenarios or two school of thoughts.
Yeah.
One school of thought is that please pay and claim input tax credit wherever you are possible.
Yeah.
No, you don't want to get into all those things. You are ready for a fight, then don't pay. Okay. Because supply, if you look at it, literally speaking, if you look at the definition of a supply means it has to be for furtherance of business. And if you look into section 9 subsection 3, it says that recipient as deemed to be a supplier. Are you able to get the point? So you become as a supplier, then when the supply is used for the purpose furtherance of a business, only then you are liable to pay tax. Okay, but if I go the notification, 13/2017 notification, it clearly says that any person to any registered person. Now usage has not been specified. Okay. Wherever it is possible for you to claim the ITC, you can. Got it? Now ITC will come. Again, there are also a bit more complications are there. Okay?
What if I'm not paying rent? On 15-1 related party, say for example, my father is owning the property, I'm renting. Like work from home. If I'm working as a freelancer and rendering service,
Yes, sir.
so 15-1 transactional value will come into place, right?
Yes, sir. Liable.
So then RCM is liable.
Yes, yes. So his question, very good, valid question. Like that, I am staying in my father's house. Okay? I am staying in my father's house and I am a registered person and running the business from the residential wherever I am staying. It's a father's house. Now whether as a related party, am I liable to pay tax on? Yes. Are you able to get the point? Whether as a related party, am I liable to pay tax or not? Right? Yes. You will be liable to pay the tax. Again, transaction value, apply that one and pay the GST.
50% of the CS will have to pay.
Sorry?
50% of the CS will have to pay. Lawyers know.
True. If you are a registered, let me make it very clear. If you are a registered and running the business from there, then yes, you are liable. Like for example, yeah.
Say I'm a proprietor of Mr. A and I have a business which is A and O which is registered under GST. Now when I do the rent agreement, I do it in Mr. A's name. So will I still fall under this category? Like, can it not be contended that I am taking this property?
Individual not possible. In individual, it is consolidated. All the turnover will be considered. So like for example, you are running a business of A and Co, right? And you are also taken a residential where you are staying over there. Now, your business, like you have an office in or a trading business in Chickpet and you have taken home in Rajajinagar to stay. Now, whether that rental is liable or not, yes, liable. But again, if you are ready for litigation, go for it. In tribunal, you will win the case. Because again, you have to look into the supply. See, what is liable to tax is the supply. Supply means it has to be for furtherance of business. Is that residential property is used for the furtherance of your business? Answer is no. Therefore, liability should not come into picture. And that is not the intention of the government also to impose RCM. Okay. Possibility, you will win over there. But you have to go through this litigation.
So there is a circular which says that in case of an individual, if the amount is paid on individual capacity, then it will not be liable under reverse charge. There is a specific circular.
That's all. If you don't record in your books of accounts,
correct.
okay, if you don't record in your books of accounts, then what happens? You are paying under as an individual capacity.
Only for individual that exemption is there.
Correct. Otherwise, there are two different legal entities.
Sir, what happens if a company deputes its employees in a different position and an employee goes and takes for rent? That is, rent is reimbursed by the company.
That's a different scenario. Because here company has not entered into a contract. Now, take a scenario. So here one more example which is given. That a company which is located in Bangalore, its employees have gone to Delhi to carry out certain activity. So it has taken a building on a rental purpose, right? The employer has entered into a contract with the landlord. Now, whatever the rent amount paid by the employee, it is reimbursed by the company. Are you able to get the point? Everyone understood the question? Now, in this scenario, whether RCM will come into picture or not, here the rental is not let out, the landlord has not let out the building to the company, it has let out to the individual employee. Are you able to get the point? An individual employee is not registered and therefore RCM will not come in.
But the other way, either this will be accounted as employee's quarters rent in the books. Okay, because it will not be accounted as a salary. If it's a
No,
salary,
it's a staff welfare, they will record.
if it's recorded as staff quarters rent.
No, you are paying to the employee.
It's reimbursement.
It's a reimbursement.
Company contract, employee has done the contract.
Correct. So liability will not come into picture there. Okay, even though it is recorded as a staff quarters, whatever it may be, but It will not come into picture because the contract is not between the landlord and company. The contract is between the. Sorry? Doesn't matter. Doesn't matter.
Even in case the company is directly paying to the landlord on behalf of that employee.
That will be. That will be. That will be.
Even though the contract is with the employee directly.
That will be. Okay? Now, whether ITC is available or not. Okay? Normally, ITC would be available. Right? Normally, ITC would be available. But if you see section 15, subsection 5, subclause G, any personal consumption, ITC will not be available. Are you able to get the point? So, the example what you gave in individual capacity, that if an individual who is a registered, okay, used, or in case of company, where the guest house is used for the personal consumption of the employees, right? Then ITC will not be available. You pay the RCM, but ITC will not be available. Are you getting the point? Okay? If it is for personal consumption, then ITC will not be available.
Guest house can't be treated as further of business because I'm having delegates who are coming over and I'm giving them space to stay.
No, correct. It is for the personal consumption of the employees.
Even if I'm like having guests who are coming down for seminars or delegates who are coming, or I have some employees who are relocating and for them I'm providing a temporary accommodation. It's for my furtherance of business only.
No, it is for your furtherance of business only. But there is a specific restriction which says that if it is for a personal consumption, you cannot claim.
In this example, the employee reimbursement. If he has taken hotel room, you would have, that would have been IT should have come. Whereas the agreement is between company and he goes and executes the work there. That is part of the business.
No, I am not denying it is a part of the business. But the issue is, it's for the personal consumption.
If he has taken the hotel room, then it.
Even a hotel room also, if it is for the personal consumption, you cannot claim. No ITC. Personal consumption also, no
He goes to
ITC.
Delhi to execute assignment for 6 months.
Goes to Delhi, he will execute whatever 6 months, he will charge CGST, SGST, you cannot claim, first of all. Okay. The second scenario, he goes to Belgaum, he will charge CGST, SGST, it is for the personal consumption, you cannot claim. Okay? Okay. So, ITC, what I am trying to say is that if it is for the personal consumption, you cannot claim the input tax credit. Now there is a second scenario or the second school of thought, you can argue that it is for the furtherance of business, but again this issue is a subject matter of litigation. Okay? But if the residential building, like a chartered accountant or a lawyer, is using for his own business purpose, the entire thing, then you can claim the input tax credit. But if partly for the personal purpose and partly for business purpose, then there will be an issue. Personal consumption, you cannot claim the ITC. There will be a possibility, there will be an issue for it. Am I clear on this? Everyone? Understood? Yeah.
So you mentioned that whenever you are taking a reimbursement, if employee claims the rent as reimbursement from the employer need not pay RCM, right? So we are making the companies to make the RCM payment because what happens, employees take living subscription which is registered in Netherlands. So they will take import of service and they are claiming reimbursement from the employer. So we are making the employer to make the RCM payment because it's an import of service. Directly they are procuring through, it is routing through employees. So we are making them to pay. So that's an appropriate thing, right?
You can do that.
Yeah.
Absolutely, because the company will be entitled to claim the credit.
Correct.
No problem.
Yeah.
So wherever company is entitled to claim the credit, please pay, avoid litigation, be done with it. Okay? Wherever you are not able to claim the credit, okay? That's where you have to look into it. Are you able to get the point? That's where, think over it. But I'm just, putting the issues before you. That these are the issues put in. Right?
I mean, one more case here, he said Delhi where the employee takes an occupancy of residential. So he will have to pay RCM under IGST, right? Because the property is registered in...
It will be again, please look into the place of supply. Place of supply will be Delhi, it will be CGST, SGST.
But he cannot take the registration, he will have to take registration there.
No, that's what I'm telling you, I'm not liable for that.
I am not registered in Delhi.
Yeah,
in
he's
that
not
situation.
registered.
So it will not be to a registered person, no? Unregistered person. Supply will
Agreed. So, in case Okay, he is telling that it is for a guest house or for whatever purpose, residential, where the employee has gone there. Now, should I get registered over there and pay the taxes?
Yeah.
Where you have entered into a contract with the landlord. Yes, you are supposed to. Are you able to get the point? Like a company located in Bangalore sends its employee to Delhi, where the company enters into a contract with the landlord for the accommodation purpose of its employee for a period of 6 months or 1 year. Are you able to get the point? Now, RCM will be applicable. Answer is yes, because company is a registered person. Now, he has to pay place of supply. Again, it will be CGST, SGST. He has to get registered over there and pay tax accordingly. Whether IGST is eligible? No, because it will be CGST, SGST. You cannot claim the IGST.
So, if you are registered in any state or you become a registered person, it is allowed where the dwelling is only.
You have to register it. That's the law.
So, it's mandate to register.
So then we can make the agreement between employee and landlord and we can avoid no sir.
We'll discuss this later. Okay? Am I clear? Everyone? Right? Shall we go on? Now, what are the exemptions available for the renting of residential building? So, services by way of renting of residential dwelling for use as residence, except where the residential dwelling is rented to a registered person, is exempt from levy of GST. So, if it is exemption, because this covered under notification number 12/2017, if it is exemption under the GST law, then automatically RCM is not applicable, right? No, this exemption shall cover services by way of renting of residential dwelling to a registered person, where registered person is a proprietor or proprietorship concern and rents the residential dwelling in his capacity for use as his own residence, and such renting is on his own account and not that of the proprietorship concern. Okay, so if basically if it is for your own residential purpose, okay, then there is no GST applicable. Are you able to get the point? But if it is for to any other person, not for the residential but for a commercial purpose, then GST would be applicable. Nothing contained in this entry shall apply to accommodation services for students in student residences, because for student hostel or accommodation is given, then GST is exempted. Accommodation service provided by hostel, camps, paying guest accommodation and the like, up to 25,000, because there is an exemption up to 25,000 per person per month, provided the accommodation service supplied for a minimum continuous period of 90 days. That's what I mean. So if the accommodation facility is beyond 90 days, then it is deemed to be considered as a residential purpose. Therefore, exemption is available. However, the rental should be less than or equal to 25,000 per person. Then exemption is available. Is that clear? Everyone? So, any renting of residential property is exempt. Even the accommodation, hostel, all those things, because there was a lot of confusion was there whether hostel is exempt or not. Then there is a Madras High Court which says that hostel is exempt from levy of GST because it is used for residential purpose only. So therefore the notification came into picture, exemption, or they amended the exemption notification, stating that if it is more than 90 days and the rental is equal to 25,000, then exemption would be available. So this is with respect to residential property. Now let's get into the commercial property. Now commercial property till date it was a forward charge. Okay. So if you are a registered person and if you are let out a commercial property, then you are required to pay the GST. There was no RCM was there. Now here recently there was an amendment made which says that if any unregistered person which he let out a immovable property other than residential dwelling to any registered person, then he is liable to pay the RCM. So for example, if you have taken an office on a rental basis, landlord is not registered, then you are liable to, it has to be a commercial property, then you are liable to pay the GST. Am I clear?
The effective date is 1st November.
That's what? 10th October. 10th October.
So, when you say commercial property, as in by way of taxes, you determine that this is a commercial property as in khata?
Generally,
or is
yes.
it by use? Because a residential property can also be used for commercial
No,
purposes.
then it comes under the residential dwelling. Yeah, it comes under residential dwelling. So generally the property documents will say whether it is for the commercial or a residential. Generally. So you take that as a step. Go by that. Okay. So here, yes sir.
Hostel accommodation, I think is in 25 or 20?
20, sir.
25. There's an amendment. So it's 25,000.
That's an amendment.
Yeah. Okay. So
that is retrospective, sir.
which one?
That 20,000 per person, they have made it from 1/7/2017, even though if you have not paid it for that.
Correct. So the commercial property. So basically, what is this is that commercial property it is C to B. Are you able to get the point? It is C to B. Then RCM will come into picture. If it is B to B or B to C, then no RCM. It is forward charge. Am I clear, everyone? Whereas in case of a residential property, it is C to B or B to B. It is RCM will be there. Get the point?
So the 10th October date is the invoice date or the contract?
Sorry.
The 10th October.
So you take from 10th October, not the invoice date. Yeah. So for example, for October, okay, first 10 days you can exclude it, and the balance you make the payment. If you are entitled for ITC, then pay it and be done with it. Clear?
This one, if the father let out some property to his son, father is unregistered, son is registered, and he has given a NOC.
Commercial.
Commercial. So in 5AB, what will be the consequences?
Liable. Liable. Related party transaction. That's what his question.
Yeah, same thing.
Related party transaction. Liable. Valuation. Apply valuation. Rule.
What if it's a joint property between me and my father?
So what happens in case of a joint property? Okay, the question is that there is a there is a commercial property owned by both son and father. Now son is a chartered accountant and he has taken the building where he is running the business. Are you able to get the point? The question? Now, since it is a related party transaction, therefore on a notional value you are supposed to pay the RCM. Right? Now if it is a co-joint, co-ownership, then what happens? Right? You can say the co-ownership only to the extent of my related thing only I am staying over there, therefore RCM not applicable. You can have that NOC accordingly.
Excuse me, sir. We had one registration at UP.
Okay.
For some technical reason, one ISD was created in Karwar.
Karwar?
Yeah, in
Karnataka.
Karnataka. So now we have taken an house for commercial purpose.
You have taken a house for a commercial purpose. So it's a residential dwelling only.
Residential dwelling.
Okay.
So whether that ISD in Karnataka is liable to pay RCM
Yes.
under 5A or 5E?
5A.
5A, the other section.
Yeah, 5AA. W.
It has to be paid by
So who has to pay? ISD? Which is
ISD, Karnataka. Where is the property located?
It is in Karnataka.
He has to pay. ISD.
But ISDs are not supposed to do any supply of service or supply of goods.
No, they are not supplying it. It is under RCM. So it is under
They are
RCM.
receiving the service.
Yeah. So you have to.
They are eligible to transfer that credit back to HO in the form of SDI.
That I need to actually look into the facts. Okay. Possibility you can transfer it, but 90% I said no. But 10% again, if we have to look into the facts, can be done.
So one more question.
Is that okay? We are having the interaction, or should I take at the end of the question? Fine. Yeah.
Now, unregistered person, his turnover is a 5AB case. Unregistered person, his turnover is 19 lakhs in the first year. Second year it is crossing, so first year he is not registered. If you see the scrap thing, they have carved out an exception in a case if the turnover exceeds 20 lakhs, you have to register.
You have to register, correct.
Here it is not carved out.
Correct. So not liable.
So
You don't have to register.
even if my turnover does not exceed in the second year,
Correct.
means it exceeds in the second year, still I need not be registered.
Correct. If it is only purely, see under section 23 registration, it says that if you are only or you're dealing with the exemption activity and all those things where you are paying only RCM, need not that you have to register.
So in this previous residential one, if a director is given his residence address, register office address,
If the director
has given his residence as register office address,
for GST purpose.
for Companies Act and all these things.
Okay.
But office is in separate premises.
Office is in separate premises. Related party transaction.
So residential reverse charge, deemed related, deemed.
Related party transaction.
What is the rate?
18%.
And if it's a composition?
What is the composition?
Composition.
How do you value for register?
Registered person.
Whatever. What is the composition?
Registered person is under compositions.
Doesn't matter. 18%. RCM doesn't look into the composition scheme at all.
Forward charge?
Sorry?
Forward charge?
Service, you cannot go for composition, nah?
No. Up to 5 lakhs.
Sorry?
Up to 5 lakhs they have allowed.
50 lakhs.
5 lakhs.
For services up to 50 lakhs, 6% scheme.
No. Composition, you can 50 lakhs or 5 lakhs? 50 lakhs, no?
50 lakhs.
50 lakhs.
Yeah.
No, if there is a dealer who is a composition.
6%.
No, irrespective of composition scheme, okay, let me put it across. Irrespective of composition scheme, RCM you are required to pay 18%.
Okay, now when it is forward charge for a composition dealer?
6%. Same rate.
Say 6%. If it is a composition scheme, okay? I have not looked into from composition angle. So, if it is a forward charge, what are the composition rate of tax that needs to be applied? Is that commercial property clear?
Yes.
Residential over, commercial over. Now, in case of commercial, what are the exemption available? In case of commercial property, so any charitable entity registered as a charitable or a religious trust under section 12A or 12B, a trust or institution registered under 1023C of the Income Tax Act, or a body and authority covered under 23BB of section 10 of the IT Act, this exemption shall not apply to renting of rooms where charges are 1,000 or 1,000 or more per day. So, if these charitable institutions, religious or whatever covered under the IT Act, registered under the IT Act, then if the renting of rooms, okay, below 1,000 exempt, renting of premises where 10,000 or more, then liable, otherwise exemption is available. Renting of shops and other space of business or commerce where charges are 10,000 rupees or more per month, then liable, otherwise exemption is available. Are you able to get the point, everyone? That in case of a charitable, religious and all those things which they let out their premises, okay? Like there is a temple, the temple property also they have constructed the, what do we say, shops and all those things. If it is more than 10,000 per month, then GST is applicable, right? If it is less than 10,000, then exemption is available. In that scenario, even though other party is registered, and assuming the entity is not registered, any of these things are not registered, up to 10,000 exemption is available. Beyond 10,000, it would be taxable, or 1,000, whatever it may be. But normally, generally they will be registered. Okay? So therefore, this one of the exemption which is available in case of commercial properties. Now let's get into the TDR. So TDR means transfer of development rights. Okay? In case of transfer of development rights, where the promoter is liable to pay the tax under RCM. Am I clear on this? Okay? Irrespective of whether the landlord is registered or not registered, the RCM will be on the promoter. What does it say? Any person, it can be registered or unregistered, services by way of services supplied by any person by way of transfer of development rights or FSI for construction of a project. Please understand, it has to be for a construction of a project. Project is defined as per RERA Act. Promoter is also defined as per RERA Act. Is that clear, everyone? Who is liable? The promoter is a person who is liable to pay the GST. Floor FSI, let's not get into that. definition of service is so wide, it covers land and building also. Now, there was an argument when GST law was introduced and whether TDR is, immovable property or whether TDR is a service. So there are a lot of judgments under the Transfer of Property Act. If you look into it, even any benefit arising out of the immovable property will be construed as a immovable property. Are you getting the point? Like for example, if there is a land where I am carrying out the fish activity, okay, fishing business. If I carry out the fishing business, so the sale of fish is also considered as a immovable property. It's a benefit arising out of the immovable property. Therefore, even that sale of fish is considered as a immovable property. Are you able to get the point? Similarly, the TDR under the Transfer of Property Act, or even for under the Transfer of Property Act, TDR is considered as because it's a benefit arising out of an immovable property and it is considered as a movable. But for the purpose of GST law, the definition of service is very wide. Service means anything other than goods. I will get the point. Service means anything other than goods. So even the TDR, land and building, will also considered as a service. Okay. Now there is a entry number 5 of the schedule 2, which clearly says that sale of land or a building. Please understand, it says that sale of land or a building is exempt. They are not liable to pay GST. But other than that, anything is there will be liable to pay tax. Under GST it is applicable. We need to find out whether under which category it is applicable. We have to look into it, right? So TDR is also considered as a service. Now there is a under VAT law. If you consider it under VAT law, because TDR is a movable, I can buy and I can sell. So under VAT law it was considered as a goods. But under service tax law, TDR specifically they have said that it is considered as a service. Development rights is considered as a service. Now, what is a development right? Like for example, a landlord and a builder enters into a joint development agreement. Okay, they enter into a joint development agreement where the landlord gives the development rights to the promoter to develop the land. Are you able to get the point? Otherwise, he cannot enter the land of the landlord. Trespass issue will come into picture, right? So the development rights which are given to the promoter is liable to pay under RCF with respect to the development rights, right? So TDR you can divide into two parts, one for the residential project, another for the commercial property. Why is because under residential property there are exemption available with respect to TDR, but whereas in respect of commercial property there is no exemption available. Okay, so I'll take it through. GST is payable on transfer of development rights by landlord or a society or a tenant to promoter, right? Transfer of development rights by government in case of some rehabilitation project, then liable. Transferable development rights. What is this transferable development rights? Where a property is acquired by the government and they give the TDR. Okay? Even that is also liable to tax. Is that clear, everyone? Now, tax payable by promoter on the reverse charge transaction after 1/4/2019. I am not getting into prior to 1/4/2019 because this RCF came into picture from 1/4/2019 onwards. Now GST on this transaction is payable by the promoter under RCF in case of transaction entered into after 1/4/2019. What is the rate of tax? 18% is payable on commercial apartments. Please understand, it is 18% on the commercial apartment and unbooked residential apartments. Understand this? It is unbooked residential apartments as on the date of issue of completion certificate or occupancy certificate or first occupation of the project as per the FAQs. Exemption, service by way of transfer of TDR for construction of residential apartment by a promoter in a project intended for sale to buyer only or partly, except when the entire consideration is issued for after issuance of a certificate by competent authority, whichever is earlier. Now, let us understand in a simple terms. What does it mean? It says that you enter into a joint development agreement. Okay, you enter into a joint development agreement with a landlord. So, for a construction of 100 apartments, where 40 apartment goes to the landlord and 60 apartment goes to the developer. Is that clear?
Yes.
Everyone? Now, what does the law says with respect to TDR? Now, landlord has given a development rights to the promoter. Right? First issue is time of supply. I'll come to that. So, in that, the entire development rights, the promoter is liable to pay the tax. What is the value? I'll come to that valuation also. Next slide. Now, out of 100 apartments, 60 belongs to the promoter. Promoter has sold, say for example, 50 has already sold, 10 is unsold. Am I clear? Landlord has sold, 20 he has sold, and 20 is unbooked. Is that clear? What does the law says? The law says that are you liable to pay TDR or the exemption available on the initial in case of promoter 50 and 20, where RCM is supposed to pay on 20 and 10, or is it only 20? Are you getting a point? Right? RCM is applicable only with respect to 20 apartments. The TDR, where the development rights with respect to residential property, please understand, I am not talking about the commercial property. It is only with respect to residential project. RCM is applicable on the 20 unbooked apartments in the hands of the landlord. Clear? In the hands of the landlord, you are required to pay the RCM. Right? You are required to pay the RCM.
Sir, please repeat it, sir. Once again, sir.
Okay. Now, exemption is available with respect to unbooked residential apartment as on date of issue of completion certificate or occupation certificate or the first occupation of the project, whichever is earlier. How much is unbooked apartment?
20 for the owner and
20 for the owner and 10 for the promoter. So you are required to pay RCM on 30 or you are required to pay on 20. Are you getting a point? Okay? So you are required to pay RCM on 20. Am I clear? Everyone?
So, in the given example, there are total 100 units. In the given example, there are 100 units. 60 belongs to the developer, 40 to the landowner. And going by the logic of paying tax in the hands of the developer, in our example, the developer has paid tax on 40 units given to the landowner by virtue of 3/19. On 50 units by virtue of he selling to outsiders, third party. 10 units are unsold in the whole project from tax perspective. The landowner further sells 20 or holds 40 or doesn't sell any is his prerogative. So in this context, is 10 not the unsold units and not the 20? Because 20 in the hands of the developer is already suffered tax when he conveyed the property to the landowner by virtue of 3/19. So what is gone untaxed in the overall project is only 10, which is in the hands of the developer, which is holding till the date of OC, which he can sell probably after OC.
Correct.
And not the 20 which we are contemplating.
Correct. Okay. So he's got a development rights for the entire 100. Okay. He got a development rights for the entire 100. In that 60, out of that 60, 50 has sold, which is subject to tax. Now the balance is 10. Right? Now, out of 20, he has, 40, the landlord, he has sold 20 and 20 is unbooked. Now, the development rights is for what? For the entire 100. Right? Now, for the entire 100, 60 which is taken by the against the land. It is against the land. Okay? So, the 20 which is unsold, the unbooked apartment in the hands of the developer is what he have to pay the GST.
But 20 is unsold in the hands of the landowner,
Landowner.
not the developer.
Correct.
Developer is only 10.
So you are liable to pay on what amount?
I feel it's 10.
Is it 10 or is it 20?
For RCM 20, sir.
Huh?
For RCM 20.
RCM on? Okay. Okay. Now let's put it across. Is that the transaction between the 40 apartments which is constructed by the developer, it is a works contract service. Okay. So on the entire 40, he is going to charge GST. Are you able to get the point? On the entire 40, he is going to charge the GST. So therefore, it is only on the 10 which is liable to pay the tax and not on the entire. So the example which Sandesh was telling is that it is on the 10 you are supposed to pay the RCM and not on the 20 of the landlord. Is that very clear? Now why I said that and try to understand is that whether you are liable to pay on the 20 or whether you are liable to pay on the 10. Okay? What is unbooked in your hand is what you are liable to pay TDI. That is RCM. Is that clear? Why? Because is that on the 40, the transaction between the landlord and the builder is that it's a works contract service. Because on 40, anyway you go to pay the tax as a works contract. Am I clear?
Yes.
Clear? So,
The way I look at it is very simple. If I'm a developer, the government wants me to pay tax on the overall units that are getting constructed in the project. If there are 100 units, they either say pay FCM to the extent what you sell or RCM to the extent what you don't sell.
Correct.
So in this case, 90 is sold in hands of developer, 40 by billing on the landowner, 50 by selling to the third party, 10 is unsold, 10 they are saying pay tax and RCM. Overall 100 units are tax affordable. So that's the objective of the government.
perfect.
But what is the point of tax time of service?
Which one? Yeah, I'll come. Okay. In case of
So law says the landowner portion is liable to pay by the promoter, GST.
any other view
Says, but in JD, landowner portion is liable to pay landowner only.
that when he supplies this, when he enters into a contract with the prospective customer, he has to pay. Okay, but irrespective of whether the landlord sells as a construction project or as a immovable property, doesn't matter. The contract between the landlord and the promoter is a works contract service. He is constructing a 40 building and giving to the landlord, right? So you have to pay the entire 40. Are you getting the point? You have to pay an entire 40, you have to pay a works contract service. So this is TDR, which is an RCM, is with respect to unbooked apartment, whatever it is, unbooked apartment, that is becomes an immovable property. So the moment it becomes an immovable property, GST is not applicable, forward charge is not applicable. So what they said, it is a development rights on the 10 part which is unbooked, you pay GST on it.
So either TDR or for
Paid.
for commercial property, commercial apartment.
There's no exemption. So I have 2 minutes. Okay, I'll just take you through this one. There is a gap which says that TDR, the RCM will not exceed more than 0.5% of the CGST, basically 1% of the value in case of affordable residential and 5% in case of other than affordable residential apartment. So there is a cap which they have given that it cannot exceed more than 0.2, that basically 0.5% or 2.5%, it cannot exceed more than that. So there is a cap given. Time when liability promoter arises, the liability to pay tax arises the date of completion or the first occupation of the project, as the case may be, whichever is earlier. It is at the time of when the transfer happens. So value and this one, I'll share you this PPT and we can take it because 2 minutes more. So in case of commercial, there is no exemption, you have to pay on the entire TDR value. Okay? 5C, it says that any person, long-term lease more than 30 years by any person against consideration in the form of upfront. So basically, when the government enters into a lease contract with the promoter a project where the contract is more than 30 years or more. Generally, you can see 99 years and kind of transactions, right? So in that scenario, the promoter is liable to pay the tax. However, there are exemptions. One, if it is an industrial plot or it is used for a finance business. Two, if it is for the residential purpose. So promoter is a project intended for sale to buyer only or partly except where the entire basically construction of a residential apartment where the government or any person gives the land for lease more than 30 years or more, and if it is for a residential purpose, then there is an exemption available. Otherwise, any any land which is let out more than 30 years, right, more than 30 years for a project, then the promoter is liable to pay the tax. Am I clear? Everyone? Okay. Now, with this, I end my session. Thank you, ladies and gentlemen. Any questions? Anything? We can, outside we can discuss on.
Thank you, sir. On behalf of ICA Bangalore branch, ICA Chandra Prakash Ji, thank you for the wonderful session and present the moment to asset of appreciation. This is a practicing chartered accountant and heads consulting practice along with providing business strategy and structuring services. He has, to his credit, an advisor to some of the leading real estate companies in Bangalore, the experience of working on the UAE VAT, a regular speaker at various forums for GST matters, and he is part of drafting team on technical guide on GST audit. He has trained central and state officers on GST and played a pivotal role in GST implementation of companies across several sectors. With this brief introduction, I welcome you, sir.